Hello, everyone. Welcome to another episode of Snakes and Ladders. This is the one that everyone's been waiting for. It's our end of year review 2025. As always, I will go round and see how everyone is. How are we?
Wonderful. Thank you for asking, Ben.
Oh, it's a very concise answer. Just want a sense check. When you say everyone has been waiting for, just run me through.
Our legion of fans.
Okay.
The three of
and my
us and
mum.
our wives.
Yeah. Our wives. My wife doesn't watch this. But anyway, the rest of the world does, and they've been waiting for this one.
Actually, rogue insight for the pod here, Jimmy. Ben's wife doesn't watch this because nowhere near meme coin enough for her.
Yeah. Yeah,
She's out there like a truffle pig looking for the absolute diamond in the rough here.
She absolutely loves a meme coin. But anyway, hang on. You all said you were good, but we have been going through Christmas season. How have we been weathering that? I'll start off by saying I am just come out the other side of a rough start to the Christmas season. So much so that I think I'm now cancelling the rest of my Christmas plans.
That's very Grinchy of you, Ben. I would just carry on if I was you.
Some of us don't have the longevity of you, sir. Somebody needs to get cruise control and get through it. Yeah, I'll be honest with you though. I've already said this to Jimmy. Ben joined our team Monday call this week, and he actually looked grey. I was quite worried about him.
I look like a corpse, and the problem is when you actually go on. I didn't look at myself, but then you go onto the meeting and you've got the camera off. You're like, well, I have to be camera on now. And I spend most of my video calls looking at myself anyway, but I was just looking at myself in horror during that one.
Yes, I would say you were actually almost translucent during that call.
Thank you, Jimmy. Anyway,
I think it's been quite fun. We've had a good time, haven't we?
Oh, we've had a good time.
I think so. It has made me a little like, I'm not sure if I want to do New Year's. That's how much of a beating it's given us.
Yeah. Oh, you'll be back for that.
Anyway, sorry. Lead us.
Sorry, Jimmy, do you want to lead us into the beginning of the podcast, our summary roundup, before we get into our review?
So, general sort of market chatter this week. I mean, I think as we all know, most of the gossip has been about, is the Fed going to cut interest rates any further, or are they going to hold? Markets had essentially priced in a 25-point rate cut, and that is what the Fed delivered. But they have also said that next year they're only pricing it. The markets now said they're only going to price in one 25-point cut next year. And even Powell came out and said the bar to reducing interest rates further is now very high from a data point aspect. So essentially, I think what he's kind of saying is that we're at 3.5% for the foreseeable unless something massively changes. And then the other news this week has been the Netflix, Warner Brothers, Paramount saga, which is almost as good as a film in and of itself. But I mean, the numbers are obviously totally wild, but it's been great to read about.
Can I just, sorry, I was kind of curious to get your take on the Fed thing quickly first before we get for the rumble in the jungle that is this slogging match. So sort of like the uneducated opinion piece on this, so they want to sense check that with what you boys think about this. So obviously the Fed has the fiduciary responsibility, or fiscal in this case, I suppose, macro responsibility to be trying to balance inflation and employment, things like that. But if you're from a political pressure perspective here, right, you've got no real issue with having slightly higher inflation to try and help offset the gross debt that you're facing. Do we think that... basically, it feels to me like that, to your point here about us not getting another rate cut, they kind of want the magic bullet here of being pro-growth with a relatively low inflation interest rate, but also quite happy to let inflation stay a little bit higher if they need to, just because actually, it's going to help them out. I don't know. I mean, I know it's all a bit Machiavellian, and they are not supposed to be politically motivated, but I just sort of thought,
Yeah, I think there's a couple of the other bits is the recent unemployment figures have come in worse than people expected. And so the Fed is kind of going, if unemployment's deteriorating and consumer debt is not looking great. I mean, the statistic I couldn't believe is that your average American credit card holder has $6,500 balance on their credit card,
insane.
Which is just wild considering the interest rate you pay on a credit card. So I think it's also
doesn't that speak to the sheer volume that some people must have, right? Because an average is just that. There'll be loads of people with nothing.
So, yeah.
Have you
Yeah.
ever watched Dave Ramsey show?
Yeah.
Some of the people get, like, oh, I'm 26, I've got 320,000 on credit cards. I'm like, who's giving it to you?
Yeah.
Yeah.
Terrifying. Anyway, yeah, you're right, Jimmy. And so the point being, they really can't afford to pay the interest rates. Yeah, well, I thought it was interesting. I sort of think one cut next year is, we might even be lucky to get it. It might just sit here for a while now, and that's not
Yeah.
necessarily an inherently bad thing. Stability is okay. I think it's now at a reasonable rate where it feels like it's worth doing stuff. Markets will move to that, right? A simple, basic sort of level. I know this is UK lens again, but they've been having mortgage wars now, and the interest rates are getting better and more competitive, which will help stimulate things there. I think the US has probably got, you got to think they might be at a decent balancing point actually for a little hold there now. So interesting to see. Anyway, sorry.
Well, no, and the other bit of sort of gossip this week which ties into the consumer and inflation and everything else, is the chief economist of Trafigura came out and said, Trafigura, which most people know is one of the largest commodities trading businesses in the world, but he basically said the oil market faces what he's calling a super glut next year.
I liked his branding, the super glut.
Which on the one hand could be potentially challenging for oil and gas companies, but on the other, if Brent does go lower than $60 a barrel, obviously because the price of energy impacts just about everything we do or touch, it's very beneficial for the consumer, and it means that inflation relating to energy should come down.
I struggle with this a little. Maybe it's just because of the build-out point, right? But on the one hand, all I'm reading about is the insane demand for energy of AI processing, and then the other hand, oil's down, I think, 17% this year. I didn't quite get that. What am I missing? Why the demands? Is it just that they don't power factories with oil? It's something.
No, it's largely relating to the fact that OPEC Plus increased their production quite a bit this year, and they've been throttling back their production.
Okay.
Russian crude is still flowing to certain countries, whereas tariff-wise, you thought it might stop, and also growth's been weaker this year. So all of it, and there's a lot of new supply that's coming on next year. So yeah, it'll be very interesting to see, because there's a lot of oil and gas companies that don't have the strongest balance sheets. So you wonder if there'll be some M&A and some deals happen next year.
Home turf for Mr. Lee here. I also, just because I doing a bit of reading about this, I hadn't heard about this at all. I was glad you sort of brought it up. I thought the super glut was great. So I obviously got AI to go and find some interesting stats around this. So the one that stood out: 1.4 billion barrels of oil are estimated to currently be at sea. Isn't that nuts?
Yeah.
That's wild.
Well, I don't know if you remember when we used to go and see a friend of ours in Gibraltar. When you got to the top of that big walk up the Rock of Gibraltar, all you could see was these huge floating vessels. And it's oil tankers just waiting for the price to tick up, and then they'll go and dock and unload their oil.
I see. Yeah, of course. They literally wait for the right day to actually secure the price. Yeah. Well, anyway, yeah, I thought that was a good one. I enjoyed learning a bit about that.
And the final one this week was the rumor that SpaceX is actively considering an IPO next year.
Now, here's an IPO we want in on.
Yes, this is an IPO. Thing is, a question from a dumbass: would that include Starlink? Or is Starlink?
I think he spun
they own
Starlink.
Starlink.
Oh my god, Jesus!
At the moment, although it's, to your point, Jimmy, might spin it out. My understanding is he hasn't yet spun it out. I hope I'm not wrong there. You'll correct us in the comments if I am, but I think they still own Starlink right now.
I mean, SpaceX would be an incredible IPO to get involved in, but if it has Starlink, which is probably one of the premier products in the world, it'd be incredible. What's the valuation though?
Over $1 trillion.
Yeah, over $1 trillion.
Oh, God. Actually, I've got a trivia question for Mr. Lee here, purely because it's home turf. Saudi Aramco hold the record for a listing in 2019. Do you know what the record is?
Of course he does.
1.7 trillion.
Wow. Everyone, all our fans, you know what? They write in every day. It's just two dumbasses and Jimmy Lee.
Maybe we should rebrand it.
But I think that the bit which is really crazy about that is one source told Reuters the valuation could be up to 1.5 trillion. And at 1.5 trillion, that does actually make Elon a trillionaire.
Oh, yeah. Okay. Yeah. Wow.
Yeah, which is just absolutely
That's a
bargain.
whole other
Anyway,
discussion point.
yeah,
Right.
Anyway, well, I mean, yes, I think if that was to happen, there's a few IPOs we've got our eyes on. Anthropic being another one. A few ones that, yeah, I'd probably go all in on, and then find myself out selling mangoes in Africa with Mr. Lambert, maybe. But some very interesting IPOs coming up.
yeah. And so
Can
on
we
to
just mention that one? You've skirted over what I think is a really interesting one. Anthropic trying to beat OpenAI out of the gates here, going public, and I just think that is such a great move. Like shrewd, really bang on. I think the markets would like the retail investor particularly, and I'm sure institutions, but they've got a bit more private market access. I think retail investors having a really well-known company that have done such a great job securing the B2B thing. It's something that I'd let pass me by until the announcement. So that in itself shows you how shrewd it was, because it was good marketing. It made me go and pay attention. And actually, we have integrated in our business this week more Claude and less GPT. So like just me hearing about it has ended up with them taking on another client. And I'm sure that's not the only person. I just think it's really clever awareness, sort of buying into the narrative.
And what do you think's changed there? Because I was hearing, during the summer that actually there was so much money in the private markets for these companies that they never needed to IPO, and now suddenly we're hearing, that 2026 just a marketing event.
In my
and also
opinion,
the numbers are now too big. I mean, SpaceX is saying they might raise $25 billion. I mean, of course, the private market's colossal, but raising $25 billion after scooping up, I suppose the other thing is so many private investments have happened. And you wonder how much ammo actually a lot of these either venture capital or large sovereign wealth funds want to put into these businesses. And an IPO is the first time they'll probably be able to access retail and the institutions who don't play in the private markets. So it will be, well, it leads us on actually to the sort of 2025 year in review. Start with one of the large. So there's a couple of pieces to focus on here, but one of the main ones was the booming AI trade up until the last month or two, and the sort of subsequent discontent that perhaps has been felt. I mean, even though the Mag 7 and the Nasdaq had very strong 2024, this year's been another very strong year for the majority of US companies. And you've seen, but what's been quite interesting in the whole thing is how it's been a bit topsy-turvy. So at the beginning of the year, it was all about NVIDIA, GPUs, and Microsoft and and OpenAI and that cluster. And everyone had kind of written Google off and said this TPU thing clearly isn't working. It's all about the GPUs. And then there's some mad statistics. So Google is now up circa 70% this year. They added
70%. Google is.
They added $2 trillion in market cap in the space of about 4 months. And now everything has changed. So Broadcom, Google, everything in the TPU universe has now gone through the roof, whereas actually NVIDIA is still 10% off its peak. Microsoft's still more than 10% off its peak. So it's not, whereas in previous years, it's just NASDAQ go up, Mag 7 go up. Whereas this year, it's actually been a lot more selective.
I think, the Google narrative, access to customers, right? The ease of being able to turn this stuff on is insane for Google. You can't help but back them. OpenAI did an incredible job of getting a consumer product out there. And in fact, talking about Claude for a second and Anthropic's move, obviously they went for B2B almost as to hedge against that. A really shrewd move, I would suggest. But OpenAI's problem surely is Google, in the same way that not long ago the narrative was Google's problem is OpenAI. People were worried OpenAI would take their lunch. And I mean, it's still plausible possible. This is not a story that has finished yet, right? But the narrative has definitely flipped, hasn't it? It's like, hang on a minute, Google already owns all this audience and they've added it to the workspace, right? I don't know exactly when they released that properly, but at the beginning of the year, I was paying for some Gemini access with certain members of the team who wanted to use it. Now it's just on everybody's workspace by default. Yes, the more limited model, but it doesn't matter. You're now in a consumer's hands, and habit is so powerful, and access to the ecosystem. So if you're using Gmail, and this is a bit for us a touchy point because we both hate Google Drive, but if you're using Google Drive, it's just the sharing links are chaos in comparison to Dropbox. But anyway, that's a whole different route. But if you are, it's native access to your information to give you a more impressive or nuanced response. Like, oh yeah, I can grab you that file, or I can do this. Those are the sorts of things most of us actually want day to day, aren't they? And they're in a better position. So that's going to be really interesting alongside the raw processing point that you're making, I think, is driven actually by a nervousness of, well, where will the consumer sentiment land on this? And how does OpenAI get to that totally defensible position? Because if it's pure consumer play and other people get good, and we haven't even got into like Amazon or Apple offering it properly, and if they did and they went with a different model, I can promise you now, if Apple released a decent GPT competitor, at least one member of this podcast would never look back.
Well, I mean,
with his 14 headphones to talk to it on.
Apple Intelligence, right, which has been a complete bust. And, I think, people are saying that Amazon is actually going to be the real winner in the AI wars because it's not specifically consumer. It's going to be robotics, etc. And they're going to actually make...
Well, there are a lot of providing the rails still, aren't they, right? AWS as opposed to front end. Agreed. I don't know. I think it's just a really interesting story to kind of watch along with. I certainly wouldn't pick it.
And even last night, Oracle announced an update, and their shares are off 10%.
Yeah,
in
actually,
sorry,
can I just take us in a direction as an Oracle shareholder? Okay,
I didn't know that. I'm so pleased I included that.
I got the headline thing that they beat estimates, analyst estimates. I was cackling, and then suddenly I saw that they were maybe off on one cloud sort of beat, and the thing's tanked overnight by like 12%. Jimmy Lee, can you explain why?
But I think that's what we're talking about. In the first 9 months of the year, investors just saw AI-related spending as a good thing. And so all of these companies just ramped up their capex to some crazy number. And it started with Meta. Meta last month put an update out and said they're actually moving from, there's the potential that even their free cash flow won't be able to cover all these new data centers they're building. And now they're tapping the bond market. And you wonder if investors suddenly went, hang on a minute, we're still not 100% sure this is going to be cash generative for you. And all of a sudden, the wheels have completely come off. You're just putting all your money into this stuff. And that was the Oracle news, was Oracle said their net debt is going to go up by 25% to 100 billion. They're going to spend 15 billion more on AI related infrastructure spend than they even said they would a couple of months ago next year. And investors are it feels like you just hit that threshold of investors going, actually, do you know what? There's kind of like some .com bubble stuff going on here. I'd quite like us to
can't
just
help that parallel, can we? The .com thing, but
please don't.
I think it's a little. It's a bit like, and we said this, was it last week before, about crypto, lots of rails, no apps. I think what people need to see is some more really strong data around the usage spiking up, because obviously I would suggest that Oracle's strategy to invest in the long run is probably bang on, probably a really good idea. I mean, if you do look at .com, they overbuilt infrastructure. We now use every last tiny thread of it and had to build a load more. So it's probably very, very good thing in the medium term. But I agree with you. It feels like investor sentiment's like, okay, yeah, cool, that's really exciting. Who's using it and what are they doing with it? Can we just hear some narrative of like why this is needed today, right here, sort of thing?
Anyway, gentlemen, let's continue on with our 2025 and review, I think.
Right. On to the next one.
Yeah, I think so.
How can we forget this? The tariff tantrum in April.
Yeah.
Which my resounding memory of, for people who know who Dave Portnoy is, he put a tweet out at the end of it, basically saying, "Why am I now suddenly poor?" As he just lost so much money in the space of a week.
Why did Portnoy lose
Trump
money
was
in
going to come in,
tariffs?
I was going to make loads of money.
What was
crypto and tech?
Oh, okay.
But so there was that. I mean, the numbers are still. Apple shares fell 23% in the space of a week.
Yeah.
About
was
the whole thing.
Liberation
It was just
Day,
a total. Right? Yes, I'm not sure that's how everyone's going to remember it, but it was just one of those moments in time of the year where every 10 minutes something was changing and the headlines were coming through and some country was going to get hit with 150% tariffs, and you were sort of going, oh, hang on a minute, this is just wild.
Sort of looking back on that, my take would be fairly quickly, I think investors started calling his bluff.
Taco.
You talk about
that
big drop off in Apple, and absolutely it happened at first, but fairly quickly actually the market kept not reacting, and it was like, well, this is weird. And I think it's because everyone went half. Yeah, as you say,
the market got used to it, right? Everything happened, and then the market just sort of just didn't do anything. Like the taco trade, Trump always chickens out, basically.
But those retail investors who bought that dip, so Apple's now up nearly 15% for the year. So if you bought it then, you've made something like 50% return on your money if you bought it at the bottom.
Do we suggest that it's all just a big distraction from Trump being in the Epstein files, which has been sort of very much the left wing, the left wing?
When we say maybe, come on, of course he's in there.
Yeah, he's definitely in there, but the tariff, it just seems...
This is the pussy grabbing president, right? Do you not remember this the first time round?
Just seemed whenever there was, sort of speculation sort of in the press, there would be a new tariff to hit something, and it would sort of seem to then eat up the rest of the media space that they had.
Interesting take.
The other one we can move on to next is gold. Gold for so long has been this sort of completely analog, boring thing that no one's bought. And the statistics are gold is now up 55% this year and 140% in the last 3 years.
The only worry about that is the last time it did that, shit went horribly wrong for the markets. 79, the best year since 1979. Well, I could, think that there were a few challenges thereafter. But as you say, absolute rib. But the interesting question, because I actually had this debate this week about investing, is whether we are at the top of a bubble there, or actually whether, because what's been weird particularly about this is that it hasn't behaved in its normal correlation with equities, right? It's felt like equities have gone up and people are going, well, that's fun. I better hedge that as it's going. Oh, this is unbelievably high. I'll keep hedging. Oh, this is really fucking terrifyingly high. I'll keep hedging. So they've both done that. And that's particularly unusual position to find yourself in. But if equities then do that, surely everybody goes, oh shit, they were right about gold. And it could actually rocket up even from here. Potentially.
I think there's a few bits to it. First of all, just all the unparalleled macro global uncertainty people have definitely been adding. You've had all the central banks post America seizing Russian assets after Ukraine. Everyone suddenly went, I don't think I want to be as dollar denominated as I previously have been.
And so tantrum tariffs didn't help, did they? So,
no, and then you've had the stablecoin issuers like Tether. They've
stats
are billions this year.
Unbelievable. 12 to 15% of central bank buying it equates to. That stat blew.
Hang on, sorry. Can we just for the dummy in the room, can we just explain that for me? I obviously know what Tether is. I know what a stablecoin is. How does that relate to central banks?
It relates to, so Tether obviously has to buy assets that correspond with the amount of stablecoin they own. And so a lot of the assets they've been buying was things like short-dated treasury bills or other forms of government debt. But the problem is that more and more people started using stablecoins. And so they didn't want to just have money in those particular assets. So they then started buying gold as well, as a kind of, just so it's a total store of value. So for every dollar of gold, every dollar they got for stable coins, they then bought $1's worth of gold as well.
Do you remember when it was called the gold standard and actual currencies used to be backed like that? In a funny way, that has made stable coins what currency used to be and more trustable, in my opinion, because that is literally what we were supposed to have against a pound. A pound was a pound because it was backed up by something. And I think that's really, really interesting.
We've gone full circle.
Gone full circle. Everybody's gone, actually, that was a good idea. And by the way, did you see that little stat? And I have not fact-checked this, so let's just be careful. But Gordon Brown sold off the UK's gold reserves, right? And I think he got $4.5 billion for it. If he'd held on to it, it'd be worth $47 billion this year.
Crikey.
So, congratulations, Gordo.
Yeah. and and also retail. Retail's now got involved in it this year, and you can't turn anywhere without someone mentioning, because there's also a tax advantage of buying sovereign coins and sovereign bars in the UK, in that they're capital gains tax exempt. So if you go to the Royal Mint and you start buying coins,
If
and they
you
go up
open
in
that
value,
drawer
there's
just
no
behind
tax.
you there, Jimmy, is it just clink, clink?
No. Is there any burglars? No, it's not.
It's kept in a really safe bank vault somewhere.
Well, that's also the really funny part for all these gold retail outlets in London, is when you walk in there and you say, I'd like to buy, a gold coin, they go, would sir like to store that with us as well? So they've got this lovely market where they'll sell you something and they'll then charge you monthly to store it for you.
It was what always put me off gold, if I'm honest, was literally that. I was like, hang on, I've literally got to sink money into keeping this bloody thing safe. That seems nuts. But yeah. More fool me.
I mean, I think the one thing which, if you look historically, what has always happened, the second there is a big market shock, gold goes down. But it goes down because people want liquidity, so they pull their cash out just so they're sat on some cash. But then gold stops going down much more quickly than the market stops going down, and invariably gold will start to go back up again. That historically has been the norm, but everyone's saying now, with gold being up 130% in so many years, is it also just going to behave like equities if the market has a big shock, or will it go the other way? Or so it's really unprecedented times for a lot of these assets now. And talking of unprecedented times, the trade which I hadn't heard of in the slightest, and has been really under the radar, but apparently you've made more money if you invested in European banks this year, almost anything else in terms of equities in the global markets. Santander's up 140%.
Yeah, I was going to quote
Isn't
your own
that
stat
mad?
to you. I was going to be like, that is...
Why is that?
I think there are a couple of reasons. Firstly, they were just so cheap. Versus if you look at like the valuation that a JP Morgan or a Citi gets, Banco Santander just is fractional. Same with Lloyd's though. Lloyd's is up 73% this year. HSBC's up 40%.
I've got here UK banks on the whole as a sector is 50% plus. Santander obviously over 100%. But I think, don't forget, they benefit a lot from the spike in interest rates. They've been making an absolute killing on the fact that interest rates are up.
Yeah.
Gives them more margin.
There you go.
And also there was a lot of news this year that I think people had slightly panicked about. Was the housing market in the UK, and I don't know in Europe, but if it was shaky and the consumer was really suffering, would all of a sudden people start handing back the keys to their homes, and then Lloyd's owns homes because of mortgages that they don't want? But that didn't happen. Consumer debt, people have continued to pay down, and actually they're saving a lot more because of everyone was worried about the budget, so they started saving their money. Well, that works great for banks because they're always taking at least 25 points off you on a savings account. So the more money
also
you have
Spain
with them,
has had
better
quite a
off
good
they
year
are.
too, just directly for Santander. The Spanish economy in general has had a good year for all sorts of reasons, which we won't go into. I'm sure they've got their own podcasters, but so I think that hasn't hurt them either. But yeah, as you say, that was a real dark horse. I hadn't seen that from the year review. It's certainly totally passed me by. So it just shows you how on the ball we are, on the pulse here. We can miss 150%.
Took us until December 10th to realise we missed a really good opportunity.
In a market that we say that we're looking to champion as well, but never mind. All right, lads. Well, thank you for the end of the year review. Charlie, you think you've got what you think is quite a playful, risky role.
Did that feel like a real slap in the face to you too, Jimmy?
No, it's fine.
Okay, so look, we've mentioned it very briefly, but let's just talk a little bit more. Hang on, I'll get my notes so I say the right numbers, because yet again, I'm not Jimmy. Netflix, Warner Brothers, Paramount, The Rumble. It actually it should be a movie, shouldn't it? That would be great. So if anybody has missed this, Netflix said, we're going to buy Warner Brothers, and agreed to buy it. How you define that in corporate parlance, but for $82 billion. And so at the start of the week, it was all like, wow, Netflix has done it. You start listening to commentators reading about it, and the big thing that jumps out is, well, how's this get through antitrust? Because Netflix owns so many of the big brands and da-da-da-da. the thing I did not say, I really truly, I don't think anybody really, and certainly no article I read and no one I listened to about it saw this coming, was that Paramount came right back out the gates and said, now hang on a minute, we'll go for a hostile takeover at 108 billion. That is a significant premium. What's that? Almost bang on $20 billion higher price. Now, the nuance here is that Paramount is Ellison and therefore related through, what's his, not son-in-law,
We got Larry and David Ellison.
No, it's
sorry?
Yeah.
Godson? Anyway.
His son. Larry Ellison's son. Oh, Trump. Okay, sorry.
There is a connection there as well. So the point that, without sort of getting into it, because who cares, there is obviously a feeling that the antitrust would be a lot softer there because they'd be more likely to push it through. So the truth is, as the more I've read about this, the more you go, well, Netflix is a giant. They've got deep pockets, amazing lawyers. They've also signed up to an incredibly high abortive cost. So they obviously think they're going to get this deal done. On the flip side, Paramount is exactly that. Ellison funded. He's not sure either. They could absolutely afford to do this. They're really motivated. And I would argue as a consumer, they do look like a better owner of the whole Warner Brothers sort of piece, just simply from a sort of monopoly play. So the conclusion, the stunning insight that we can offer you on this podcast was that none of us could really pick who's going to win this. So we thought instead, why don't we let the coin choose it? So this week, instead of presenting you with a whole bunch of things, hang on, let's get the great news, guys, is that not only does Google have an amazing dice roller, the graphics I know stun our viewers every week, but we also have a coin flipper. So, I mean, honestly, the production values here are stunning. Who's getting heads, do we think? Someone's got to call it. Netflix is heads?
Yeah.
Okay, Netflix is heads. Paramount is tails. Whichever one we get, we will add to our snowball analytics. We will buy a share in there and we'll see whether we've managed to pick the winner as successfully as the octopus called the World Cup results with about as much backup. So brace yourselves. This is the moment where we find out the future of Warner Brothers right here. Look at that. Look at that animation. Oh,
Netflix.
Okay.
You must let the coin decide.
Yeah.
Sadly, I think that was the wrong decision. But there you go. We will buy Netflix. In the past, it's done nobody any dispatch. Oh, by the way, very quick one on that. Can't remember the exact time horizon, but I saw the most wonderful chart comparing if you bought Netflix around its initial IPO or bought Disney shares, you put $5,000 into Netflix, it would be worth $4.5 million.
Yeah, we don't like that sort of stuff here. We don't like that stuff.
Yes, we do. We're here for optimism. We're here to tell you, you might be that person.
Future. I want that fucking prediction now. What do I put in now?
Anthropic.
Well, Starlink. SpaceX for sure.
I think one of the bits that was so interesting when it was announced that Netflix were going to buy it was the huge uproar in Hollywood, basically saying they shouldn't be able to buy it because then they won't do cinematic releases. They'll change the way the consumer watches films, blah 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 blah. And there was a real cultural outcry.
What they meant was we won't be able to get paid as much because there'll only be one employer.
Exactly.
Yeah.
Precious talent. God, I'm going to get cancelled. Whatever.
Well, it doesn't matter. They'll all be AI soon, won't they?
Used to be a film director as well, but working with actors is definitely not the highlight.
Yes, which I maintain is why you're bitter about this, because interesting and unknown fact, the only people that don't get royalties every single year are the fucking video production companies.
Director.
So if you go back historically through our catalogue, we're still paying fucking voiceover artists and people for year after year.
Photographers, voiceover artists, musicians, everything.
Making nothing in the middle. We're just sat here getting
the creative behemoth behind it, i.e. me, nothing.
On that note,
anyway, thank you so much. Thank you so much for joining us again. For
this ray of positivity.
I have no love for them, but I have love for our fans. Please continue to tune in. Our legion, thousands of fans. We will continue to update you and regale you in the markets and beyond. Thank you so much. Lots of love to my two co-hosts, Jimmy Lee and Charlie Lambert.
See you later. Thanks, buddy.
And we'll see you for another.
Toodaloo.
Toodaloo. We'll see you.
That's the finish. Cut.
If you haven't noticed every sign up I've done, I've tried to make it a bit silly and getting sillier.
I have
that was the
spotted.
one that broke the dam. So toodaloo from us, and we will see you next week for our projections for 2026. Lots of love.